All right. Good morning, everybody. Second here. So things are going to get, and they have gotten a little more erratic and whippy. We're just starting out the morning looking at, the screen with multiple ETFs, and you can see clearly in technology, it's been consolidating now. Well, 3, 4 weeks almost. Even over here where it started, that was a little consolidation and it popped up. So tech has been underperforming a little bit. Industrials, little outperformance, had the wider range bar. So these are weekly charts. And what we want to do from this weekly time frame, keeping things in perspective, is ideally we don't see prices break down below these wide range bars. And like with all wide range bars, ideally any correction stays in the upper half. And unless something motivates prices to start moving more aggressively lower, I think prices will chop around in those areas. So consumer discretionary, which has been doing really well, we have an expression, prices reach their destination, where they came all the way back up to where they fell from here. And, they bottomed out down here as interest rates began to stabilize, and now interest rates are now in question as to whether they're going to start, or I should say, continuing to move higher, which is going to put some pressure on technology and definitely home construction and home builders, which have been leading. So I think we're going to go through a little period of consolidating the gains, which is normal. Consumer staples had an alert down here. This usually does better in a period where uncertainty creeps back into the market. So I got an alert under here, but keep in mind to see if this begins to flip back up again. And you can see, Europe topped out even before the US did, and it was leading the way up, but that's rolled over. Kind of waiting to see if it falls. You got France here, you got Germany, started to break down last week, and Europe hedged by the dollar. The dollar started moving up. And you had that move down last week, which we'll get to. Let's just go over there. And that's just a broad overview of things to look for. But interest rates, popped up pretty strongly. And they've been consolidating now, as you can see, for several months. So the markets, these little blips up for the most part, the markets ignored that. There's periods of consolidation. But what we want to keep an eye on is whether, this starts to break out above these levels, which I think is what could start to rattle the markets quite a bit more. This has been in a trading range. And it's like any trading range that traders, investors are watching. Some will buy at support and some are going to sell at resistance. So we would anticipate they'll sell at resistance. But looking at the 10-year here, but what happens if they break out above this area? And now that they've been consolidating as long as they have, and this is what we call bullish price action at resistance, and then we get a wide range bar out of that area, it may consolidate a bit again, but it's something that we need to keep an eye on and look at the power of that move. And this is the 30-year, and look at how that moved up, clearing these pivot highs. So definitely something you want to be aware of. Shorter term, the 5-year went up, it's up at this resistance area, but look at these numbers. And almost 4.5%. And you could look at the 2-year, which went up. And so we've got these short duration instruments paying pretty high yields. And that is competition for equities. Meaning you can go get it, buy a 2-year bond. You can buy 3 months, 6 months, 5%. do you want, and this way, look, we're more active, but people will think, why would I want to risk my money in equities when they've run up like they have during these 6 months? Well, maybe I take that money and put it away for 6 months and guarantee to hold on to my gains and get another 5%. So something to think about. But we'll keep an eye on, see what these interest rates are going to do. Well, the dollar. So this just jiggled around. It was a little odd, but I guess it was because of the news. And it's popping back up here. You can see where my cursor is, more than halfway into that red bar. It's in a trading range. So it just goes along with the whole theme of uncertainty as market participants begin to gather more information as to what's going to be happening in the second half of the year. And that's going to lead to more erratic price action. So be prepared. Gold moving back down. It blipped up as the dollar moved down last week, but this is still in a downtrend. It's consolidating, just choppy price action for now. Our ETF letter is short that. This looks like it could roll over. It's in the bottom half of this wide range bar. It's what we want to see when prices are consolidating and you got a wide range igniting bar. Go read the chart of the week. I wrote about igniting bars and wide range bars. There's a video there. You can just go to the website and click on chart of the week up there. And I'm going to go deeper into that conversation this Thursday at this event that's been coming for a while, but I'm presenting there on Thursday at 5 p.m. They don't make recordings to send out, so they will offer you to become a member and spend some money to get whatever, including recordings. So hopefully you can make it. So where are the markets at? Well, not doing much of anything here this morning. Futures going to dip down here and come right back up to yesterday's close. Really not doing anything. They're in this support area that we marked off last week. I said almost touched it, I guess, give or take. And, had this little pop up in the middle of the day and then all the way back down again. And so now they'll consolidate here, whipping around. So not expecting too much. There's not really any news coming out today of significance some Fed guys talking. I don't imagine what they could possibly say that's going to be any different than what we've already heard. But, if they have something, anyway, we'll see how it unfolds. As I see things, I think things are going to kind of chop around here for a while, at least for today, as we gather a little bit more information. Let's look at spiders. So spiders here, you can see the bottoming tail and then that rally that occurred on the news, and the sellers were just lurking up there waiting for it to come into the resistance and got blasted back down. And so now I've marked off here in the S&Ps expiring today. We've got these puts expiring today. So this is already below there, give or take. It's right there. So some of these could unwind and maybe push it down a bit. You've got this resistance up here, and this just leads me to believe that, even if, this comes down here, it may get driven down into this area where there's this, kind of large open interest at 435, to bounce off of there. And there's those bottoming tail bars support. So, I know it's kind of a wide range for intraday, give or take, but I think, just the way things are set up here, they'll probably bounce around in here during the trading day. So unless they, get down below that 435 area, which would then open up the door to coming down to that major support point down there. But we'll just have to see how this unfolds. If it gets beyond getting out of here, give or take. So with that being said, SPX, last I looked, 430, what does Jake got for? But Jake wants to go below that. I don't blame him at all to be below that number. I don't know if there was enough premium there. You can do some spread. There's 60 by 65. Ideally to be below there, and unlikely that it could get up there. So things are tightening up again as the reference points between resistance and support begin to come together. That's what's going to happen unless we get some kind of a significant move. And the best, times or moves that happen in SPX is when we have it early in the morning and, the institutions start buying, let's say if it's going down, they start, buying protection and they jack up the premiums and the puts far away. We don't have that this morning, so things tend to tighten up. All right, looking elsewhere, Qs, they weren't moving much at all. They weren't moving much. You can see the cursor there, rising 20 MA, stuck between support and resistance. Nothing happening there. And it's, pretty much across the board. NYC, we're probably going to have some choppy price action for a while. Mid cap has this wide range bar up. There's some resistance there. It's kind of messy. The transports were doing better than others, but up against this resistance area now. So they stalled last week. I suspect they're going to consolidate. Those futures doing nothing. NQ futures waiting, doing nothing. You see the lower high. And so the relative weakness there compared to the S&P that made a higher high. So the S&Ps were lagging, so they led a little bit, but look how momentum slowed, the distance between the highs and the depth of retracement just kind of borderline so far as to, stopping in the middle of the prior week's wide range bar. So prices are correcting so far through time. No significant damage done. And like I said, everybody will be waiting to see what the next news event is. Everybody's now in figuring out it's a given. They're going to raise interest rates a quarter point. And we'll see what's next. Covered interest rates, but you can see TBT, right, the ETF. Right, look at that wide range bar. That's a power bar. So while it's at resistance, does it stay in the upper half of the upper third? Does it eventually break above this area? In addition, look at USO and look at this line chart. It's already closed a new closing high above this resistance area. So if interest rates are going up because markets, bankers, whoever believe interest rates are going to stay high, they want higher interest paid for the money that people want, and oil starts moving up, higher interest rates, higher oil. We already got higher food prices and so on. I think that paints out a little bit of a bearish picture in the short term, and we'll see how that unfolds. And part of the reasons why I think that ensures what people are believing right now, that they're going to raise interest rates, and who knows if they'll be done after that one, maybe not. So plenty of information to suggest tread lightly. pick your quality patterns as always. Maybe trade a little smaller, look to add to the ones that are working, and we'll see how it unfolds. All yours, Nan.
Good morning. So big interest list here. I'll just go through them, but yeah, as Greg said, momentum stalled. So just obviously not pushing the throttle here on anything. I think there was only one earnings pre-market, Healy or something. A ring, nothing to do yet, but it could be the start of a big bottoming pattern. I mean, look at this thing. It's still just drifting here on the monthly, but this thing was $450. It did break out. There's nothing to do yet, but I'm putting it on my watch list. Rambus, we'll see. It's gapping up here a little bit, a semi. See what it does in this gap fill area. MOB, little guy here, blasting pre-market. Look at that. That's 100% gap right there. Talking about things, as Greg was talking, I was scanning a couple things and I saw this Wall Street Bets. Do you remember? That's the firm that caused the GME short squeeze. So some clown on there says, oh, Riven's up whatever percent, 5% pre-market, so I think we should buy it. So I pulled up the chart. I'm like, really? Based on what? I mean, I wouldn't short it yet, but I mean, look at this thing. It's ran from 13 and change, doubled. That's crazy. But it's just the mindset of people. I mean, things are up 100%. It's up 5% now. So that's the reason that you want to buy it now. CNK rolled over, a little failed retest here, and it has a void. So this is a short watch. NGO, closing breakout. So that is on my long list. Healy. Oh, this was the earnings one. Now, what immediately? Oh, it's still not showing charts. I am so sorry, you all. Sorry. You should have told me earlier. Sorry, guys and gals. All right, here we go. All right, so this is the earnings one, Healy. It's up a lot, nothing to do now. Wow, that's gapping up 10. Wow, that's a monster gap. But just a reminder for everybody. So I have daily bottom left, I have weekly here in the middle, and I have monthly above that. They're small, so I can just click the chart and blow it up whenever I want. Look at that textbook W bottom. What is that matching? Your chart is synchronized. But this would have been a core long. Daily, weekly, monthly were all in beautiful alignment. I'm just assuming this was earnings over here. So it blasted, and then it's been in a trading range for almost 2 months. Nothing to do now, but I just like pointing out patterns because we're pattern traders, and we need the discipline to trade only high probability things that we call no-brainer setups. So when I see one, it just puts it in your memory bank of, man, this was such a beautiful setup. The next time you see it, you'll have more confidence. Greg mentioned this water when he was in his scanning video. So this is a wide range closing breakout. That looks great. Expedia, I posted a new trade here on GTN. Let me give it to you guys. So GTN was another one Greg mentions in his video, wide range closing breakout from a bottoming pattern. Now this, we do MT lives obviously on many subjects, but GTN bottoming patterns is one of our subjects. And this is a beautiful one. Started with this double bottom, deep retracement. It's bobbling around in a trading range that allows the 20 and 50 to flatten out. Closing breakout. Look, closing breakout means closing price. And it's above that month and a half consolidation. Now, this Wednesday, this actually would be a good example. This Wednesday, we're going to be talking about, voids and resistance and transfer, what resistance is relevant. So is this resistance relevant? The answer is yes, it is. But all of this multi-month bottoming power and this closing breakout suggests that it's going to go through it and then move up further into the void. Maybe, maybe, I don't know, 950 to 10 has room. ASL, another closing breakout. This was one of the sporting stores where a bunch of the, there was Hib and Foot Locker and Nike. They all got beat up badly. But this is kind of a complex double bottom. Here's my left bottom retest, and here's my higher one with a big old void. And so that's a closing breakout. Bib, that's an ugly wide range closing breakdown. And look at the monthly here's an M top. You see how my eye it automatically it knows where to look. So that's bearish. Daily, weekly, monthly are all in alignment. That would be a beautiful call spread. And this one, again, Wednesday subject about resistance. Yeah, there is resistance here. It's a watch. It's not ready yet, CMA, but it's a candidate for a breakout. And that same with this thing, TFC. These are some of the beat up regional banks. Monster last Friday, I mentioned this in the green room as a day trade short. Failed little bounce here, a continuation pattern. You got two doji bars with a big void. So that was a good trade and still looks lower. NOV, now here is a decisive closing breakout, inverse head and shoulders with a void. Looks like the target is gap fill, but the problem is it's up too much intraday. So I don't like the reward to risk here without getting a pullback. We always watch this this dunking alarm. All right, this looks good. We got a wide range bar on the 20 and an uptrend. And see, I like this 15-minute chart better than NOV because NOV just went straight up. Whereas at least this came back and consolidated. So it's more of an end of day base. So dunking looks good as a new trade. We have it in our letter, but my alarm went off. OIS, wide range closing breakout. Now this would be an ideal 1, 2, 3 or 1, 2, 3, 4. Give me 2 days of bullish resting. Walmart. Wait, Jose here. ADTN. It's a bottoming pattern. I mean, it's at resistance here. I would prefer something like this to have a continuation bar, like a bottoming tail of some sort. So I do like the weekly is, what we call a minor, but little bear sandwich there. But I'm just not sure about the risk to reward quite yet, but that's worth watching. All right, back to Walmart. There was an article in Barron's saying, that's an M top right there. That's an M top on the daily breakout failure. There was some article about them trying to get into technology also. I heard on CNBC that they were talking about, not Google, Microsoft, apparently on 60 Minutes last night, Microsoft and Meta. They were trying to see which one's going to win the AI battle, and I'm just assuming that might be the cause of today's gap in these two. So Microsoft is, it's got an ugly gap down, actually, gapping under last week's base. So that's now a call spread watch. Meta is gapping up to Friday's resistance, but that's a power uptrend with red bars ignored. In the green room, a bunch of people we were long this on Wednesday. Oracle, failed little buy setup here. Short day trade watch here, target into the gap fill. Mondelez I like as a short. Friday's low. FedEx is strong as can be, but there's just always a risk on things that are far from the 20, and particularly with these accidents that we've been talking about, breakout failures, etc. Just that's higher risk that a pattern like that can fail. Satish trades kind of wildly, but it's bullish daily, weekly, monthly. All bullish over Friday's high. Asmil, another kind of short idea. Friday's low, another accident. Look at that. That's a Bear Island reversal right there. 100 greater than 100% retracement, topping tail. So Friday's low, that should go lower. MSAS, but FLS, Friday's high, I like. MSAS, Greg mentioned MJ, marijuana, and I liked MSAS better. Look at MJ here. Well, MJ, MSAS is still stronger, but this could be the home run entry on this thing. It's not like that other chart where he said it was a no-brainer core long. This is not a no-brainer core long, but it fits into that category where I say, let's say hypothetically it's at $5 in 2 months, and I'll say, look at where we got in on those two wide range bars, increasing volume, breakdown failure at all-time lows. So all right, so MSAS, we got to wait for a gap fill for our ETF. All right, I got a number of alarms going off. TPX. TPX is triggering. PSA, we have short puts, BXP. We're long stock. Dunking is triggering.